traders, Cousin Vinny coming to you from theclosingprint.com. Happy Labor Day, this September 7th, 2015. In this video we're going to cover the indices, which we all know have seen better days. The S&P 500 down 3.4%. The S&P Composite 1500 also down 3.3%, I believe. The Nasdaq 100 down 3.34%, comp 2.9%, and the Russell IWM down the least 2.3%. High-low percent for the S&P 1500 Composite, which is the 600 small caps, 400 mid caps, and S&P 500, is still on a sell signal. Tick and Tick Q for the NYSE and the comp marginally higher, building a little cup pattern. So we're watching sentiment of what the institutions are doing. NYSE and NASI, the McClellan oscillator for both the NYMO and the NAMO, near crosses on the NASI, and NYSE crossed last week. Breadth, I forgot to update that, so disregard that. We had MDDs and MADs this past week, very volatile week. As we continue, CPC, we all know that VIX is still elevated. It is dropping off the highs. VIX VXV is mid-range, so that's no signal there. US dollars appears to be in a sideways range. I'll show you what I'm talking about there. Bonds were marginally higher on Friday, but they're below the 200 period moving average and above the 50 MA, so it's sandwiched between those two moving averages. We're watching TLT for confirmation. If TLT starts to move higher, we're going to expect to see more weakness in the S&P 500. It is what it is. Commodities, crude oil is higher, but it's off the Monday recent high that we saw. Copper is marginally higher, and gold moving off of the 50 period moving average resistance. XLE is trying to build a base and trying to turn as well, looking for relative strength in the sectors and setups. We're looking at a new scan and the candidates therein. Here is a chart of the S&P 500. Things that we note: this index followed the New York Stock Exchange Composite and the Dow Jones in that we saw a bearish cross of the 50 and 200. Typically you'll see those preceding bear markets of more than 20%. Still not convinced that that's going to occur, but we do have a cross there, and most of the indices have been down anywhere from 10% down to around 15% on the New York Stock Exchange Composite. So that's still bearish. The 10 EMA is holding prices back. We have the 10 EMA below the 20, the 50. So we short bounces into this zone here until the 10 EMA starts to turn back up. Prices get above same. It's still looking fairly bearish. I keep thinking that we might, as we pushed outside of the lower Bollinger Band, we are trying to build a base and trying to repair some of the damage that we've seen. So if we see a base building in here, we could see some backing and filling, which would be bullish for the market. It's bearish, we could see lower prices and test this low that we saw back here at in the last week of August at 1867.01. MACD starting to hesitate. The histogram was trying to go positive. Now we see we're still down below the signal line and moving sideways. Slow stow is off the red zone, getting nearer the green zone. Could bounce this week. We'll just have to watch what price gives us. Remember, price is king. Right now the indicators are hard to read, if not impossible. Looking at the NASDAQ 100, our leaders in the market, the likes of Apple, Microsoft, Google, PCLN, so on and so forth. We have this large volume by price congestion level to get above. We can see there was a lot of selling in this area. Buyers that were in around the 200 period moving average are likely to sell if we get back to break even. So we're monitoring this situation. The 10 EMA is overhead, Same situation as the S&P 500. Moves into this zone here between the 10 EMA and the 50, as well as the 200. More than likely we'll get short activity. So this is weak until the 10 EMA turns back up and price gets above and stays above same. So we're starting to see some repair possibly in the Index 500. So we'll keep an eye on that. Note these lows here, prices are above that we saw back in early January. We'll look to see if that holds as well. I would find it hard to believe that we're going to test these lows, but anything is possible. So we have to watch what price gives us. MACD, same here, moving sideways. Histogram, watch for that to go positive. If you're bullish, if you're bearish, you want to see the histogram turn back down, and slow stow turn down as well. We're at the 50 level. Looks like we're trying to firm on the slow stochastic. The Russell Weekly, as we pointed out, was down 2.3%, holding right here at the 130 period EMA, the orange line. We had something of a club, not a hammer, a club last week, the previous week, and last week we came in down and tested again, held off of that level. We're watching for a little relative strength on the Russell. Let's take a look at the daily. Looks pretty much the same as the other indices. MACD looks a little better. It is positive. Slow stow did get up to the red zone, moved off of it, holding at the 50. Looks like it's trying to change direction. We'll keep an eye on the Russell. And this previous level of support turned resistance now, which we were rejected at last week. 10 EMA is below the 20 and the 30 as well as the 50, so we have to be concerned that this isn't a short in this area. We have to see the 10 EMA turn back up and price get above same. Okay, so let's look at some of our indicators. Breadth is very important. Obviously, this is the NASDAQ McClellan oscillator. We closed positive for the week. Note that the NASI, NASI, McClellan oscillator, the summation index, is trying to give us a cross. If we look at the NIMO, we see a similar situation. We closed positive. Note the EMA is starting to turn back up, and we had a cross last week as well. A little tepid and timid as well. We'll be watching this as well as the New York Stock Exchange Composite for clues as to the direction it's going to take. Pondering tick cumulative, as we pointed out in the intro. Building something but cup here, we want to see institutions return and start buying. So this indicator will give us a heads up as institutions come in and tick continues to climb like we saw back here in January of 2015. We're seeing hesitation here. Of course, it's during the summertime, so we wouldn't expect much from institutions during the summer anyway. So we saw a trend very elevated last week, hit extremes at 5.5 intraday and also on Friday. So we'll keep an eye on trend, what the selling was about, if it's just rotation or if it's more than that. And here is tick Q for the comp, looking very similar. We want to see this kind of action here. Until we do, this is more hesitation on the part of institutions. So we can expect more of the same on the indices. Note where trend Q was very elevated for the last couple of weeks. Way up here at 1.75, closed at 1.84. Alright, you want to see tick Q down in this area if you're bullish, and if you're bearish, you want to see it in the upper zone. More breadth indicators. This is the New York Stock Exchange common stock only advanced decline. Note that it's pointing down. We want to see that change direction. Let's take a look at the NYAD, which is the New York Stock Exchange advanced decline, of course, advancing minus declining issues. You can see the red lines turning down as well. It's back in sync where it was out of sync before. We saw some divergence in late May through the summer, which gave us an indication that we saw some distribution in here, and of course we fell off on that 15.5% pullback on the New York Stock Exchange Composite. So let's watch for New York Stock Exchange advanced decline to continue to climb. Hopefully this little blip down is just a short-term occurrence. New York high low percent, the new highs minus new lows. Saw a little bit of a red bar. The moving average is continuing to climb. We want to see this back above the zero line if you're bullish, and if you're bearish, you want to see this start to build towards the downside, indicating that breadth is starting to deteriorate again. This is the New York Stock Exchange Composite, and what you should note here is the high-low index. It's a 10-day moving average of the record high percent, which is 52-week highs divided by new 52-week lows plus new 52-week lows. So we're near bottoms, obviously. We're at extreme levels. We want to see this turn back up and slow turn up as well. The New York Stock Exchange Composite up-down volume, we noted the MDDs over the last 2 weeks. We had one MAD, major accumulation day, above 90%, and it's kind of hard to beat these 3 down days. So we want to see some MAD action if you're bullish. If you're bearish, you want to see continuation of this situation that we see here. CPC finished at 1.48. It's in an elevated zone that we normally associate with bottoming areas. We could just be building some strength here and repairing some damage, or in the worst case scenario, we come down and test these previous lows in late August. Bollinger Bands are still pointing down. The upper band is pointing lower as well, so we could see grinding action to the downside. If you're bearish, that's what you want to see. So this indicator really isn't giving us a lot to go on. It is elevated, but we're not giving it as much significance as if we were in this price action that we saw most of 2015. VIX is still elevated. We're certainly off the highs that we saw 2 weeks ago, but we're still elevated above 25, 27 level, which is telling us that there's still people out there that are concerned. VIX to VXV, the front month to the 3 month, we're right in the middle here, still at an elevated level that we've seen firming before. Not putting a lot of emphasis on this indicator only because we're at such extremes, and for the most part volatility is somewhat broken. We want to watch this build a base here above these lows in October. Doesn't mean it can't come down and retest these lows if you're bearish, but we are watching this sideways action, this little bit of a triangle pattern that we pointed out last week. During my intro, I mentioned the US dollar possibly in a sideways range. Previous to this recent price action, we were in this descending wedge. Then we went into an ascending wedge. We broke off of that. Prices moved. The US dollar moved below the 50. Saw some firming action at the 200 period moving average, but this range is starting to develop that we're watching very closely. Considering most commodities are traded in the US dollar, we would expect to see sideways action in those commodities as well, like copper, gold, silver, etc. If the US dollar moves higher, we would expect those to move lower, and vice versa. If the dollar moves lower, we would expect to see those commodities move higher. So it's in a range-bound environment, it looks like, until proven otherwise. Here's copper, for example. Put in new lows, lower than the January low. We expect to see this continue to see weakness as the China economy sputters, since they were buying most of the copper. We do see the builders firming, showing some relative strength on our indices, so we'll keep an eye on those as well. Gold rejected at the 50 period moving average. This zone, we had this volume by price level above, so we'll watch and see how this Friday action turns out, the action of last week. WTIC, nice bounce off of new lows, upper Bollinger Band with the 50 period moving average rolling over. We're interested to see whether or not the 10 EMA continues to move higher, and this compression zone here between the 50 and the 10 EMA pushes prices higher or lower. So if you're in any of the crude oil trades that we put on, keep an eye on that as well. Here is a chart of TLT, the 20-year. We had a nice little bounce on Thursday, Friday. Prices above the 10 EMA, but below the 200 period moving average. We are concerned if TLT and bonds continue to firm, that could put added pressure on the S&P 500. Note where slow stow is, moving higher off the green zone. MACD looks like it's trying to turn. It is above the zero line, so there's a possibility that bonds could continue to rally. Note the volume by price congestion zone in this area, not to be taken lightly. Here's what TLT looks like on the weekly. Presently, we have a lower high. We have a hammer this past week. We are above the 50 period on the weekly chart. So we're concerned. We'll watch this. If TLT starts to cruise higher, bonds might be telling us something. So we have to take heed of that information if you're trading the S&P 500, generally speaking. Here are some charts that we found relative strength in. Didn't think I would see it in retailers, but Abercrombie and Fitch showing relative strength relative to the S&P 500. Obviously, we'll keep an eye on this one. These names popped up on a new scan that I've been working on, tinkering with this weekend. Note MACD is positive. Slow stow is in the overbought zone. Looking at the volume here, which is one of the things that we're watching for. Another name that popped up, similar. Note the action here around the second and third week of August was Sprint. Early August, note the volume that showed up from this scan. We had a nice little flag here at the 10 period EMA with this volume by price bar overhead. And MACD is positive. Slow stow is starting to set up again. Another name that showed up on this scan was CLD. Note that there are different sectors showing relative strength. This one looks like it's going to try to break trend. We'll keep an eye on it. The volume was very indicative of a peak. Keep an eye on these names. Note the little hammer spinning top on Friday and the two spinning tops on Wednesday, Thursday. A little down bar on Friday. Haven't yet decided how I'm going to put this scan together, whether I'm going to add it to my book or not. We'll see. Let's take a look at some more examples. This is one for our British friends. Same scan, picking up indications of stocks before they break out, which is something we've been looking for the high tight flag scan. We want to see the pole and trade this action, not just the tight flag and then a breakout. We want to see the prior run-up as something to trade as well. Note the volume on this particular stock. If you're trading on the London Stock Exchange, something you might want to check out, African Potash. AGI.TO, Alamos Gold, traded on the Toronto Exchange. Another stock where we see volume coming in, price put in a base and then starts moving higher. Just some stocks, we're still tweaking this scan, but note MACD is above the zero line and slow stow turning down a little bit. But we have this overhead zone as resistance, showing relative strength while the indices have been moving lower. AMKR, semiconductors, note we're in no particular sector, but we see these stocks that are showing increased volume, having built a base, showing relative strength to the indices, and starting to pop up on these scans. So it's something interesting to come across this weekend. When you test your brain, a lot of times it does things that might surprise you from time to time. And I was a little bit surprised on tweaking the scan how certain names popped up. They're all showing similar type of action. Not our favorite type of chart pattern, but we're seeing some similarities in a lot of different stocks that this scan is starting to pick up on. So something to keep an eye on. Aquarius Platinum, a London-based traded stock, AQP.L. Note the volume. Again, slow stow turned up. MACD's positive. You're starting to see a pattern here. Note when the prices get above this volume by price bar into the Kirby, this one could start to move higher for our British friends. Keep an eye on this one. Also note the prices are squeezing into the moving averages, one of the things this scan picks up as well. As you would expect, ACI, Arch Coal, and BTU both showed up on this scan as well, which is what started this whole process when we were looking for correlations between those two stocks and what others might have similar to these two stocks that we've been trading for the last 3 weeks when George Soros got into ACI and BTU. Note the volume here and how prices took off. Above the volume by price band and no overhead supply to speak of. This one's basing now, it seems, and we have the 20 period rising up, 50 periods changing direction. So this scan picks up some very interesting candidates. Not particularly interested in Ariad Pharmaceuticals, but note XBI had been showing some head fakes. While this stock showed up on the scan, would have been obviously an interesting trade as it built this little reversal action off of the lower Bollinger Band, ran up. Not particularly fond of the pattern, obviously, but the fact that the scan is picking up some of the same things. MACD above the zero line, and slow stow was oversold and turning higher, and we see this volume step in. Interesting things that this scan is finding. It also picks up cheap names, penny stocks if you will, building a base here. Note the volume, note where slow stow is. MACD's fairly flat on this one, but interesting that it picks up these pops as well. Best Buy, BBY, note similar pattern here, broke out of this descending pattern. Increased volume, slow stow turning up, MACD above the zero line. Starting to see a pattern? I am. Caesars is another name that popped up on the scan that I've been tweaking. CZR, note the change in direction off of the lower Bollinger Band. There is volume by price congestion here, so that's something to be concerned about. But prices are hugging the 10-period EMA. They're above the moving averages. Note that the prior point where these stocks showed up was in this squeeze zone between the 10 EMA and the descending 130-period moving average. Slow stow turning up, MACD above the zero line. So I'll be posting some of these charts on the blog for tomorrow. Just keep that in mind. I'm going to get out with the kids and the family and go apple picking and peach picking. If you're a new trader, be sure to check out the blog. Here's the address, theclosingprint.com/CV_BLOG. Note this is case sensitive, so be sure to do that. It's a Linux server. If you're a new trader also, I published a recent book that has a lot of strategies for new traders as well as intermediate traders alike. There's some things in there for more advanced traders as well, so keep that in mind. Check it out, and we will talk to you soon.